What's up, guys? Welcome back to Nate Trades. This is week number 2 of documenting my journey to becoming a consistently profitable day trader. This week I took 5 trades, 3 wins and 2 losses, so I'll get into the good, the bad, and the lessons from this week. So getting right into the first day, the bias was pretty just to be patient. We had this 4-hour fair value gap here that we're respecting and this 4-hour bearish right here. We swept out the 1-hour intermediate low after market open, and we were heading up towards this 1-hour fair value gap right here. We kind of boomed up, and I didn't get a trade set up to there. I didn't take this 2-minute inversion right here, or this 1 minute even, just because it had already gone past my break-even point, which would have been here. So I didn't take that, and then we kind of boomed up. We boomed up 300 points, I believe. Yeah, just about 300 points, and hit that 1-hour fair value gap. Now at this time, I was looking over here. I saw all this LR. I was like, we're probably just going to keep ripping higher. What I didn't take into account was that we had just hit the 1-hour fair value gap, and so trying to catch a continuation long was a bad idea. But that's the lesson I learned. What happened? Okay. So price rejected down. We entered this 15-minute bullish fair value gap, and we had this 5-minute bullish one as well. Now the lesson from this trade is that I pattern traded it. What that means is that basically the A+ draw of liquidity is not there. And you just see, it hit a fair value gap where it swept out a level, and I got an inversion. Stupid. That's the lesson that I got from today. This was what I entered. We had a resweep tapping into this new 5-minute. There wasn't a 5-minute existing right here and a 5-minute here, but they both got inverse, which is another telltale sign that I shouldn't have taken the trade. But we had a resweep, I guess you could call it, and a clean inversion right here. So I entered off of this 1-minute IFVG. My break even was here at this 5-minute fair value gap, which I still stand by. I think this should have been hit if we were going to be bearish. But what do we do? This move was really, really big. It's 300 points. So we ended up just chopping around. This 5-minute was my break-even point, and I did have my stop here at the low, and it did wick me out. And then it went on to chop around, chop around, chop around. It did take out this low, and then it went up to the 5-minute fair value gap. Nothing I can do about that. Wrong. I can do something about it. What I can do about it is have a better draw of liquidity. Not take this trade is what I would do next time, because this A+ draw of liquidity was not that. So let's get into Tuesday. Alright, so getting into Tuesday's price action, it was pretty clean shorts. We had taken out this obvious swing low right here, and we were clearly just, you can see, a dummy could see it, we're just trending towards this low. So I was pretty bearish on the day. I was actually extremely bearish on the day after market open. I'll tell you why in a second. But we went up. We had respected this 4-hour fair value gap, and we had just been respecting these 1 hours. So if we're respecting bearish, I'm going to trade with the trend. So getting into the day, we had this little low right here, which was kind of a swing low. And then we had this obvious one as a more external draw, along with this 4-hour swing low all the way over here that we're just clearly trending towards. So going into the day, I was like, okay, well, I'm only taking shorts. I'm not going to consider taking longs. And we had all this LR here. We had London highs here. I was like, where could price reject off of? I figured London highs. Now, there was no 15 or 5 unmitigated fair value gaps. We did have this 5-minute right here, which had been tapped into multiple times. And so that was pretty much my only condition. I was like, if we get clean displacement off after some sort of obvious sweep, I'll take a short. Like if it's super clean, I'll do it. Otherwise, I'm just waiting for London high to get swept. What did we do? We went down at market open on the 831 candle, created relative equal lows. At this point, I was like, all right, I'm definitely only taking a short. So we went right back up. We ended up respecting this 5-minute bearish fair value gap and then inversed this 1 minute right here. At this point, when it was moving up, I was like, okay, if this candle's big, if we inverse it, that to me shows that price is rejecting and it's going to go short. And I thought this relative equal lows was A plus, and I was right. So when it did inverse, I did enter. Now by the time I entered, it just happened to be right here. I have been experimenting with my stop loss, not putting it all the way up here, an 88 point stop. And so I put it at, the wick high, or I've been testing out the body high as well, like if I were to put it like right here. Anyway, so I put my stop there. My break even was just this low. There was no other break even possible, and it did play out, which was super clean. Now, after this was 8:43, 13 minutes in the market open. I was like pretty happy. The mistake I made. Now, the mistake I made was this. We were clearly displacing lower, and I decided to stay on the charts. For whatever reason. We were displacing lower, just clearly trending towards this swing low. Such a swing low, you can't even see it by scrolling. We ended up edging this swing low and retracing up to a 5-minute fair value gap. Now, that's my continuation model. So, to chart it out real quick, we had this 5-minute right here. We inversed, we retraced up into the 5-minute. And then we got displacement. At this point, I was like, okay, well, it seems very clear that we're just trending towards this low. So I took this on a personal account, which now hurts worse. But I was like, okay, I've taken one trade, one win. I'm going to be done with my evaluation accounts. And I was like, I could keep trading and just trade my personal account. Stupid idea. This was the trade that it looked like this would have been my break even, this New York AM low. We went down, and we edged it, and then stopped me out. At this point, I was like, bruh, come on, Nate. So, lesson learned, even if the trade idea is A+, the lesson learned is, after I've already taken one trade, don't take another one. It's stupid. Alright, now Wednesday I didn't take any trades, and I'll explain why. I was very bullish on the day. We had all this high time frame LR, stacked highs. It just looked really, really good for bullish. And we had just taken out this swing low right here. So at this point I was just bullish. So I was looking for a place that price could reject off of. Now that place I was looking for was right here. There's this 15-minute intermediate low, which is just a low inside a fair value gap. Well, what did price do? It edged it. It came within like 5 points of it and then boomed up. If it had tapped it, I would have taken a long. It didn't, and we just went 400 points straight up. So at this point, I know that after distribution comes accumulation, and at this point I just decided I wasn't going to take anything. Anything I did take, it wouldn't be A+. So we did move all the way up, and then I believe we moved all the way down. But I was just off the charts at this point. Alright, getting into Thursday's price action. It looked super clean for longs. We were clearly trending up towards this high right here, and we were respecting bullish 4-hour and bullish 1-hour fair value gaps. So we obviously had higher targets. We had this 1 hour right here, and we were just trending towards this swing high. So at this point, going into this day, I was very, very bullish. We did generate a lot of LR right here, but I was okay with that. I was hoping just for a clean long setup. Had this 15, I was hoping for a tap into and then just catch along. That was my A+ idea for the day, but that didn't happen. So totally fine. We had this data low right here from 7:30 news and this swing low, as well that I was hoping to see price sweep out and then we could catch a long. That was my idea for the day. Didn't happen. But we pretty much just chopped around and chopped around and chopped around. And at this point, I was like, okay, this is weird, but I'll just stay out of chop. We ended up creating relative equal lows here. And so for a continuation model, clear A plus drop liquidity. We had a 5-minute bearish for value gap right here that at this point I was like, okay, all these stacked lows, these look really, really good. Plus data lows down here looks really good for shorts. But then we inverse the 5-minute and I was like, okay, I'll stay out of it again. And then what did we do? We were just clearly trending up. We were just clearly trending toward this high. So I was like, okay, maybe if we take out the high, we'll go lower. But until that, I would be bullish towards that 5-minute or towards that high. So what happened? We opened up a 5-minute bearish fair value gap. Now this is on ES. NQ didn't have it, and for me, I will trade on ES if NQ doesn't present the setup. So at this point, I was like, okay, well, we're just clearly trending towards these highs. And then I got blessed with a retracement to this 5-minute. Now I did I told you earlier I was experimenting with my stop at the low of like the body, which is exactly what I did here. I entered off of this 1-minute inversion, got in a little bit late, and in 2 candles it hit my TP. Let's go. I was fire. And the putting my stop loss at the body low really helped me on this day. Now it did, as soon as it hit my TP, it dumped. And when I say dumped, I mean it dumped 1,000 points, which I haven't seen like ever. That's crazy. Anyways, that was the trade for that day. The lesson was, if I'm confident in A plus drop liquidity, just take the trade. Yeah, that was pretty much it for the day. It was pretty choppy, and then I just got blessed with a retracement before we hit the draw of liquidity. Otherwise, I definitely would have been looking for this short right here to all of this, but I got my win and I was off for the day per my lesson that I learned earlier in the week. All right, getting into Friday. Friday's price action for me was super clean. On the 4-hour, we had just dumped 1,000 points, and so I didn't really expect a lot. But I did think that we could go up and rebalance equilibrium, hit this 4-hour, maybe this 1 hour up here. So for that reason, I was pretty bullish. For taking along, I was looking for either a sweep of this 15-minute intermediate low right here, or a tap into this 5-minute fair value gap right here. So we kind of chopped around. We had news at 8:45 right here, and we had news later at 9. After hitting this 5-minute fair value gap, we just displaced so much. I was like, okay, yeah, I'm gonna take this. Yeah, I'm gonna take this. Oh no, this is too much. I can't take the trade. This candle was just too big. So I looked at the other time frames. I just took a 2-minute inversion actually right here, which kind of helped me a little bit. So I took a 2-minute inversion here after hitting a 5-minute for value gap and sweeping out this 15-minute intermediate low. And we had all of this LR built up right here. Relative equal highs from New York AM high right here and just a pre-market high. And yeah, it was super simple, super clean. I went stop here at the body low and TP here for just a clean 1.18, which is all I need, and then just a break even here. I didn't go break even at this high because I figured there's no reason we should reject off of it, and simply that. I just changed my break even strategy a little bit this week since last week I was out break even twice, and both of those ran to my TPs, which is just eye-opening for me because I was like, well, if I just don't go break even, or if I go break even at a more obvious point, other than like the high of the leg or something very minute, that it would just work out better. So Friday was super simple, super clean. Hit this one right off rip, and then got off for the day. I learned my lesson on Tuesday that I would just get off if I took a winning trade. So that's it for this week's trade recap. Going over the lessons that I learned this week that were super, super good. Let me get into my notes. The lessons I learned this week was to just don't stay on the charts after I take a win. Don't pattern trade. Always have an A+ draw liquidity, and to be patient, but to be reactionary. I didn't think this 5 minute would send price so fast, but it did. This week, I think I definitely improved. Is a green week for me. It's been a fat minute since I've been green on the week, which is super good. I was very patient this week, which is something I improved in. So yeah, it was good to get confidence from my trades hitting take profit instead of break even. So yeah, thanks for watching this week's trade recap. I'm committed to showing you the real journey, the wins, losses, and the lessons of what it actually takes becoming a profitable day trader. So if you're learning futures trading, day trading at all, or you just want to follow along, hit the subscribe button below, and I'll see you next week. Peace out.